Hey guys, good afternoon and welcome to Your Stocks. I'm Pavitra. Ekta is with me as always. And Ekta, seems like the market is powering higher once again, right? After that initial downtick that we saw, we're back at that 19,780 mark. So holding up quite well, and you do have the broader market participating as well. So I think that's encouraging. 180 points on the mid-cap index, and the small caps have also held steady through the day. So quite a good session considering that we've already run up so much.
Hi, Pavitra. Yes, absolutely. And, there's so much traction which has come into a couple of these banks and financials. Yeah. So there seems to be a lot of upside which is coming into specific stocks. So, for example, IndusInd Bank, which has managed to remain steady post its numbers yesterday, that stock is up around 2.3%. We've seen buying in bigger stocks such as State Bank of India as well, which is up around 1.5%. Kotak Mahindra Bank, which comes out with its numbers on Saturday. So that seems to really be a pocket of strength. And more on that in just a bit. We also have other stocks such as L&T, Sun Pharma, Divi's Labs, Coal India, all of them which are buzzing around in today's trading session. So definitely a recovery from the lows, and buying at lower levels is what has come through for our markets, with the mid-caps outperforming. Joining us this afternoon, we have Rajat Bose on the technicals and Parthiv Shah, who's joining in on the fundamentals. Rajat as well as Parthiv, welcome to the show. And we have a couple of queries lined up. First, we have one on Bajaj Finance. Darshi Shah calls in from Mumbai. He has investments in Bajaj Finance. Hi, Darshi.
Hi.
Tell us.
Wanted to know, now with JFSL coming in, which is in the same sector as Bajaj Finance. I am holding Bajaj Finance since my average is 1100. Just want to know, how do I go about it? Will there be any impact on Bajaj Finance with JFSL coming in?
Okay, well, congratulations on holding on to your investments in Bajaj Finance, considering the kind of returns that you are sitting on with that particular investment. So kudos to that. But Parthiv, this is the big elephant in the room in terms of a question. What is going to happen to Bajaj Finance once there is competition with deep pockets that comes in? What would you recommend to somebody who's sitting on profits on Bajaj Finance and the impending competition? Do you think it'll just be more room for more players to address the market?
Good afternoon, Ekta, Pavitra, Rajata, and our viewers. I think it's a very interesting question, because I recollect the fact that, when the Serum Group bought into Poonawalla Finance, which was originally Magma Fincorp, I think there was a lot of buzz and speculation that he wants to be the next Bajaj Finance and try and dethrone the position. But yes, no doubt they've done well, but we can see the difference in the balance sheet size. I think Bajaj Finance, the way it has been growing, the AUM and the disbursements, and the way it has managed its cost of funds, I think it has been the industry leader in consumer finance. And I think it's more of a fintech play as well. I would say the technology platform that they bring is not being easily replicated by either the banks or any other NBFCs. No doubt, I think the entry of Geo Financial Services, whose strategy probably we are expecting more of it will be known during the AGM. And they're going to be aggressive, no two ways about it, because they have a fantastic ecosystem. They have a very strong customer base, whether it comes through their Geo phone vertical or, for that matter, their Reliance retail vertical. So they are going to be aggressive player. But Ekta, if you look at the Indian consumer finance industry, I think that is going to grow extremely well. We are talking about a sector where, when the per capita income goes to almost 4,000 rupees, I think we'll see exponential growth in this segment. And I think there'll be a lot of room for new entrants as well, especially even the incumbents will also do very well. And Bajaj Finance has laid out a fantastic 5-year roadmap in its annual report, which is also pretty encouraging. So they are not really deterred by any sort of competition. Rather, the industry will evolve and grow further. So we believe that the investor has got into Bajaj Finance at a very attractive valuation. Hold on to it. I think this is a great growth story for the next 3 to 5 years.
Okay, hold on to Bajaj Finance. Rajat, coming to you. Of course, coming on Bajaj Finance. And another question I want to ask you is that, if you want to trade Reliance, does that make sense to do right now ahead of the demerger tomorrow? I mean, you have an hour and a half to do it. Is that something that you would recommend?
No, I wouldn't, because it is better not to trade right now and expect that. I mean, you are trying to outguess what is going to happen It is much better actually that after the event is gone, say that both the stocks settle down, then you buy into Reliance or Jio Finance, whatever that is. So I don't want to play that lottery kind of thing because the probability of winning is very low. Having said that, coming to Bajaj Finance, technicals, I'm coming to it, but one thing what I would like to add with what Parthiv says is that, see, Bajaj Finance, you give them your Aadhaar card or PAN card, they judge your creditworthiness and they issue the loan within 2 minutes. Literally, I've seen that. And Bajaj Finance is something like Asian Paints in the paint industry. So it will definitely be, there will be some major competitive advantage of Bajaj Finance will be tasted, but that doesn't mean that you can actually unsettle the leader in that easy manner, even though the Jio is backed by the might of Reliance. It would be for the investor, since he has invested in Bajaj Finance at 1100 rupees, I would suggest that put a stop loss below 8,000 and continue to hold on. Bajaj Finance can't be unsettled so easily, even if Jio is to be there. So if I were in his shoes, I would have kept it.
Okay, and both of our guests there agreeing that this is a good one to hold on to. You've already seen, very good money made on this one, but continue to hold on to Bajaj Finance. And in all this time anchoring the show, I've never heard a different view on this stock. So that's on Bajaj Finance. By the way, Jubilant Pharmova's numbers are flashing. Ekta, there seems to be a big drop in the revenue. The stock has also seen a sudden slip.
Well, yes, the margins are the weak point for Jubilant Pharmova, where the EBITDA has fallen around 12%, or rather 12% on a year-on-year basis, the absolute basis. And the margins too, which have been weak for the company in the past couple of quarters, has decelerated further, and there's been a sharp drop which has come into the profitability. It wasn't really anticipated by the street, so maybe we'll wait to see whether there are any kind of one-offs. But it's an 86% year-on-year fall that we've seen in terms of the profitability for Jubilant Pharmova. And there has been an operating miss which has come through as well. So we really need to see the P&L and see what's taken place between the operating line as well as the bottom line, and whether or not there was any kind of outflow which was exceptional this quarter. But nonetheless, it is definitely disappointing, even if there was an exceptional, because the margins have come in at a multi-quarter low for the company this quarter, just at around 10.7%. Revenue has not looked too bad. It's up around 9.3% on a year-on-year basis, but margins have been an issue for the company in the past couple of quarters and has shrunk further for Jubilant Pharmova. The generics business, for example, was under pressure, but their radio pharma business was recovering post-COVID. But it seems as though there has been some amount of a miss which has come through this time around.
Okay, that is on Jubilant Pharmova. Parthiv, would you like to come in on this? I mean, I know we just have the initial numbers right now, but what are your thoughts on this stock right now? Like Ekta was mentioning, the main pressure seems to have come through on the margin front.
Absolutely, very rightly pointed out by Ekta in terms of its various segments, especially the radio pharma, the allergy therapy segment, even the CDMO. I think all these segments for Jubilant Pharmova are kind of struggling in terms of them garnering proper margins. And this is what happens when the product profile becomes more commoditized, and a lot of new entrants would be giving a lot of competition. And also we were expecting slight improvement in the margins because quarter on quarter, if you witness, I think there was some improvement in terms of the intermediates which goes into making all these APIs and the formulations. But I think we have not seen any such progress there. Goes to show probably there was a product price erosion, which does not bode well for the sentiments. And on a trail multiple basis, it's still an expensive stock, unless and until I think the management gives more conviction on the con call in terms of when the recovery will take place. I think the fortunes of this company doesn't seem to change often.
Okay, got that. Around 3.5% lower on Jubilant Pharmova right now. But let's also get in our next query. We have Prashant Hegde, who writes to us from New Delhi. He has an investment query. He says he wants to buy 500 shares of ONGC for a period of 6 months. He asks if the holding period of 6 months will give him 10% in terms of a return. Parthiv, how would you answer this? I mean, I know it's up 10% in the past 6 months, but of course this one is linked very closely to what goes on with crude as well. But what do you expect on ONGC?
I do wish I had a crystal ball, because predicting a stock like ONGC for 6 months, and I'm sure Rajat would agree that, even for 6 years, what a laggard this stock has been despite all the upstream assets it's been having. Again, I think I would not want to venture into ONGC for the next 6 months. It's better to go into the refining space, especially names like, say, Chennai Petro, where they have a reasonably good complex refinery and the refining margins are looking reasonably good. But for a 6-month view, talking about ONGC, I think it would be a futile exercise. And I really doubt if there are any triggers. No doubt, I think the overall PSU space has been buzzing. Some of the companies have given stellar returns. But here, in case of ONGC, because it does, it's a proxy to a lot of inflationary pressure that the consumers could face. So that's why also we see companies like ONGC don't get the right pricing power, and plus the duty structures are such that despite the lower cost of recoveries that they have, they don't tend to manage a lot of margins. So our sense is that one can avoid ONGC for the next 6 months.
Okay, Rajat,
Okay.
what about you? How do you look at ONGC for just around a 6-month period? Do you think that there is room for upside here?
Well, ONGC is in an uptrend. Actually, the uptrend is continuing right from 2022. In fact, around October, it has started its uptrend, and that uptrend is continuing despite some corrections. So there is a possibility that ONGC might continue in its uptrend and move up. But whether the 10% return in 6 months is, it is possible, but whether it will really happen or not, I don't know, because there is no such tool available to ascertain that this would be the time period by which this level would be reached. At least I do not know anything of that kind. And even if there had been, I don't think as a SEBI registered intermediary we are allowed to say that within this period of time you will gain 10% or so. So I can't say that. But definitely the 10% of 183 ONGC might reach. 6 months or later or earlier, anything can happen.
Okay, all right. Well, let's get to another query now. We have Gurbinder Singh Bedi, who writes to us from Noida. He holds 50 shares of M&M, which he's bought at around 852, and 23 shares of Maruti, which he's bought at 9,138. Long-term investor wants to know if he can buy more of these shares. Well, both of these shares have run up quite significantly already. But Rajat, do you see further upside, and is it a good level to buy or buy further on M&M as well as Maruti?
Not only M&M, I would say the whole market has already moved up quite a bit. Definitely these stocks can be bought. Both M&M and Maruti are in a long-term uptrend now. So you can buy, but my suggestion would be to wait. Say currently Maruti is at say 9,600. Better entry point would be if it were to give say some kind of a correction in that. You get it in around 85, 8700. That time you enter into that would be better. And regarding M&M, I would say at least say something like at 1300 to about 1350. If you get that around those corrections, when those corrections happen, then you get into them, add more. That would be better, because buying here would be a little top heavy, and that would bring in extra risk which is not warranted at the moment.
Okay, got that. Parthiv, your call on some of these auto majors, M&M and Maruti in particular. How would you look at these? And, this entire space has seen quite a move higher in this year. Do you think that this is a good time to be adding more, considering that, this is for a long-term horizon?
Pavitra, we are upbeat on both M&M and Maruti. Firstly, talking about M&M, I think they've done a stellar job in terms of new product introductions, especially in the utility vehicle space, where they've again caught up with a lot of lost market share. And the order book is swelling, and they're upping their capacity as well. It goes to show, I think things are moving the right direction, and a lot of operating leverage is also getting generated. Even their farm equipment segment, where there was slight worry related to the rural recovery and rural demand. Now with the onset of reasonably good monsoon, we are expecting a reasonably good rural recovery in the second half. So I think M&M also benefits there. Overall, I think after a long time, we are seeing for a company like M&M, where all the verticals are firing on all cylinders. They're doing well. The pipeline is also good. And even here, our senses, because M&M is also holding company for a lot of other group companies, on the core valuation basis and sum of part valuation basis, we still feel M&M is attractively valued. So one can add here as well. Talking about Maruti, again, quite a similar story. I think they have reasonably good presence in the rural segment where the entry-level car volumes were down. So if one looks at Maruti's numbers overall, one would see the volumes looking a little tepid. But one can avoid that because, what Maruti has been doing is introducing a lot of new SUV car ranges, which are quoting at upwards of 15 lakhs. And that is the price point where a lot of other automakers are also targeting. And Maruti has regained a lot of market share in that segment, which is helping them to drive higher value share, if not the volume share. So overall, I think we believe that Maruti is also looking good. And what we are witnessing is that a lot of, demand for these high value cars vis-a-vis the entry level cars. And Maruti is doing that. So hold on to Maruti as well.
Okay, all right. So that's on M&M as well as Maruti. Just want to point out with regards to Jubilant Pharmova, what the street probably doesn't like is that there is a sequential deceleration which has taken place in the margins as well. So that's coming at 10.7% versus 13.1% in the last quarter. So there has been an operating miss which has come through for Jubilant Pharmova. This is despite the fact that they had reported a loss last quarter. And this quarter, they've turned into the black. So there's been a Q-on-Q recovery on the bottom line, but really not a Q-on-Q recovery, which has come in on the margins. So that's what the street doesn't like. So yes, they have generated a profit this quarter, but not enough to enthuse the street as the margins have come in at 10.7%.
Okay, that is on Jubilant Pharmova, 3.4% lower right now. But with that, we do need to get into a quick break. There are lots more stock queries that we have for you in just a bit, so stay with us. Welcome back. You're still tuned into Your Stocks, and we still have Parthiv and Rajat both with us to help us answer all of the queries that you've written in with. So let's get to the next one. We have K. Sambasiva Rao, who writes to us from Tamil Nadu. He says he has 300 shares of TVS Motors, which he bought at 750. The stock is currently over 1,300 rupees, so he's seeing a good profit on this one. He also says that he's a long-term investor and can hold his shares for another 2 years. He's comfortable doing that, and asks whether he should stay invested or sell at current levels. Parthiv, coming to you on TVS Motors, this stock has, seen a 50% rally in 1 year. How much more do you think you can see in the next 2 years, and does it make sense to hold on to this one?
If you see, I think all the two-wheeler stocks were languishing, and it was only TVS Motors which kind of excelled in its strategy of gaining more market share in the domestic markets, also focusing on exports, a lot of premiumization focus, which led to a lot of improvement in its margins. And now what we are seeing is that the stock has had a stellar run. No doubt valuations are also rich, and our sense is that if I compare with some of its peers like Hero MotoCorp or Bajaj, I think TVS Motor valuations are extremely high. And this is despite the fact that still TVS Motors is not close in terms of the margins that it delivers as compared to its other two peers. It's a company with great pedigree, great management. But here I would suggest that it will not be a bad idea to convert half of its positions into something like a Hero MotoCorp, where again over there we are expecting a rural recovery in terms of volume sales, and also they're focusing a lot of value by introducing higher premium models where the booking numbers are looking quite interesting and the valuations are cheap. So at least convert half of the TVS Motors into Hero MotoCorp for next 2 years.
Okay, well, let's get in another query then. We have Madan Khurana, who writes to us from Jaipur. He holds 700 shares of Triveni Turbine, which he's bought at around 275 rupees. And he's bought 150 shares of Rail India Technical and Economic Service, which is at around 300 rupees. So that's RailTel. And he's a medium-term investor, wants to know what to do with these two positions. Well, Rajat, what would you recommend on both of these?
Well, regarding Triveni, I would say I would suggest booking profits, because there is a distribution pattern in that for the last couple of months or so. And this is seen at the top, and the 14 RSI is giving a strong negative divergence. So it is better to take some money off the table, at least 50%, if not more. And if the other stock is rail tail, am I right? It is rail tail.
Yes.
In that case, it's a hold because there is still a possibility that it can move up further. So continue to hold on. But regarding Triveni Turbine, at least book part profits.
Okay, got that. And with that, Rajat as well as Parthiv, we're going to thank you. And, we have to wind down on the show. But thank you, as always, for taking out the time and speaking to us on this edition of Your Stocks. We are going to wind down with the news that the market is up just around 12 points. It's been quite a quiet day. But, the banks have seen quite a pickup from the lows. So that is definitely something that is positive, with IndusInd holding steady right through the morning and right through the day. We're going to wind down. But remember, you can always email us all of your queries and we will take them up with our experts. Stay tuned. Closing bell comes up after this very short break for the final hour of trade.